Welcome back to some more finance stuff. With so many different things in finance to do, it's really easy to just get overwhelmed and not really direct yourself into a field that you're really interested in that you can target on, and that's the easiest way to not get a job. Now in this video, I'm going to be breaking down different careers in finance, the major ones that you can go into and that you can focus on, and lay them out for you so you can decide which one is right for you so that you can start focusing on that one from now, giving you the best chance to land either an internship or a job in that kind of a role. If you don't know who I am, I'm a junior at Rutgers University, not a target school, and I've successfully landed a junior year internship, a front office role at a prominent Wall Street bank. My goal for this channel is to help you do the same. Now, I just want to put it out there that I am by no means an expert in anything. I am just talking from my own experiences, and if there's something that you can use from my experiences and the lessons that I've learned to help you, that's the only goal for this channel. Let's get into this video when I break down the different careers in finance that you can get into. Now, when talking about careers in finance, the ones I have most expertise in and I can talk most about is the ones that are Wall Street roles. Now, let's break this down into two different sections. One is the sell side and one is the buy side. What do I exactly mean by sell side and buy side? The sell side on Wall Street are the people who are providing services to the people who are on the buy side. The easiest way I can explain this to you is by giving you examples of who is on the sell side and who is on the buy side. Someone who's on the buy side might be someone like a hedge fund who needs services from someone who's on the sell side, like an investment bank, in order to do a trade. Or someone on the buy side could be a private equity firm looking to buy a company. They can't do that all by themselves, so they need someone from the sell side, like an investment bank, to help them do that transaction. And the reason I'm breaking this down into these two sections is the most common way that people get onto Wall Street and these kinds of careers is by starting somewhere in the sell side and then transitioning into the buy side. So let's get started with the sell side. The first career we're going to talk about in the sell side is the one that everyone goes after, the one that is coveted as the holy grail of Wall Street: investment banking. Now, this term is thrown around a lot on Wall Street and among college students who really want to get into that, but what does an investment banker do? The most simple definition of that is they provide services to clients in guiding them in financial transactions, raising capital, or whatever else it is that they need from a financial institution. Investment banking can be broken down into three major parts. The first one is mergers and acquisitions. Second one is capital markets, so whether it be debt capital markets, equity capital markets, and then the third one is coverage groups. What does mergers and acquisition entail? When you're a part of a mergers and acquisitions team, your primary goal is to help whoever is buying a company, mergers and acquisitions, do the proper due diligence and guiding them into whatever company that they're acquiring. What are their financials like? What are the future projections for their cash flows? What are the risks that the company faces? And you're probably going to be doing a lot of modeling, such as discount cash flow modeling into the future, leverage buyout modeling if you're working with a private equity firm, and you're going to be basically living in Microsoft Excel and or Microsoft PowerPoint. Number two, capital markets, debt capital markets, equity capital markets. What you're doing here is helping whichever company that is your client raise money, whether it be through debt, bond issuances, or whether it be through equity, stock issuances. So whenever you think of IPOs, these are the people that handle these transactions. Let's say that a company wants to issue bonds and they want to get financing that way. It's the debt capital markets group that will help them do so. Now, the third thing is coverage group. Now, unlike DCM or M&A, where you're focusing on a single client, when you're in a coverage group, you're focusing on a whole sector at once. So it would be healthcare, TMT. Your clients are not just limited to one or two companies, but a lot of companies that are within that particular sector. You're going to be providing all sorts of services for them. Now, this one, if you ask me, has frankly the most client interaction because you're actively engaging with these people on a regular basis to see what they need and help them with whatever they need. So those are the three main things that are in investment banking. There's some other stuff like loan syndication and really complicated stuff that we don't really have the time to cover in this video, and frankly, I do not have that much expertise in. But when it comes to the work-life balance, unfortunately, investment banking has one of the worst work-life balances you could possibly have. Now, a lot of companies are taking initiatives to ensure that there is more work-life balance. For example, some banks are now doing that, Saturdays are guaranteed off in order to make sure that employees have at least a day for themselves. But if you're an investment banker, just know that you're kind of always on call. You're kind of always needed by the bank. It could be a Sunday afternoon and you need to review a pitch deck that you built and you're expected to do so. But because of this, you also get compensated the most out of any career out of college in Wall Street. One of my favorite stories that one of our professors was telling us at Rutgers was how he helped these two kids land a front office investment banking role where they were making 150 for the first 2 years, and they were already getting recruited for private equity where they would be making around 350 and 350 for the next 2 years. So if you add that up, they're making $1 million the first 4 years out of college. There's really no other careers where you can do this right out of college, unless you start your own business. So if this sounds like a right fit for you where you don't care, you're a work animal and you can just dedicate yourself to your work like nobody else can, you don't care about work-life balance, you just want to make as much money as possible right out of college, then investment banking might be for you. Now keep in mind, regardless of anything, the main thing that matters is that you're actually interested in this stuff. Otherwise, they'll sniff that out right away in your interviews and you won't even get into the role in an internship to begin with. So make sure that first and foremost, you're actually interested in finance and things in finance that you want to do. It's super easy to identify when someone actually doesn't care at all about what they're talking about and they're just trying to put on a show where they want to seem like they actually want to do investment banking. But the second sell side role we're going to be talking about is the one that I went into, and that is sales and trading. Now, right off the bat, I can tell you that from what I've heard of people on the street, now I haven't actually started my internship yet and I'm definitely not working full-time in sales and trading, but from what I've heard with the people that I've networked with is that sales and trading definitely has a lot more work-life balance than investment banking. If the market's not open, you can't really do a lot of sales or trading. Now sales and trading, obviously there's two different parts to it. There's sales and there's trading. Yes, every desk will have a sales team and a trading team, and the two work hand in hand. And if you're a trader, most people have this conception that people in this role actually try to make money for the bank. That is not actually what happens. All you're doing as a trader for the most part is managing the positions that your clients actually want to put on. You're making markets. For example, let's say that someone from a hedge fund calls you and they want 1 million shares of Tesla. Now, as a trader, it's your job, whether you have 1 million shares of Tesla, because for some reason you picked them up in anticipation that someone would want to buy them later, or you have then to go out in the market and get 1 million shares of Tesla from other people and get them over to the client that wants that. That's a super general overview of what a trader does, but in essence, that's really what you're doing. You're market making. You're not trading to make money for the bank. Now, the salesperson is who is in between that other person at that different institution and the trader. He facilitates between the two parties, and it's his job to make sure that the client is happy, he's getting a good price, but also the trader can actually do that price and not get ripped alive and lose a lot of money for the bank. If you have a general knack for talking to people, making impressions, being personable, the sales side might be for you. But if you have a tolerance for risk, if you've traded in the past and you really like that feeling of managing different positions, trading might be for you. Now again, it's not exactly like you trading on your Robinhood account, because you're not really trading the bank's money for the bank to make money. You're more sort of managing the bank's money in order to make markets for your clients. Now, I can speak from my experience. The reason I went into sales and trading is because of the fact that all the people that I networked with told me that it has a better work-life balance, and I have other plans to do stuff besides just my job. The pay, although it's slightly less than investment banking, it is very comparable. And actually, one person that I networked with told me that if you take a look at it from a per hour basis, sales and traders actually make more because they work so much less hours. Now, another big part of sales and trading is that you actually have to be interested in the markets. You know, what's going on in the equity markets, what's going on around the world that could affect different markets, like the FX market, what's interest rates doing that can affect bonds, different things that are happening around the world. You got to be able to keep up with this stuff and kind of connect the dots into how something that happens across the world might affect markets here. So if that sounds like something that interests you, then sales and trading might be the right path for you. Now, the next sell side role we're going to be talking about is equity research. I was once listening to a talk given by a managing director that was specializing in equity research, especially in REITs. And the best advice he gave for the people wanting to get into equity research is to only do it if you're a really curious person and you love to get expertise in one topic. Because essentially what you're doing with equity research is providing ratings on certain companies. You're doing tons of deep dive research to make recommendations on companies, whether it's a sell, whether it's a hold, whether it's a buy. Whenever you see those ratings on Yahoo Finance or other places, it's the equity research people who are actually doing these ratings and making sure that they're doing the research behind their decision. Equity research has decent work-life balance, pretty comparable to sales and trading, except for earnings season. What I've heard is that during earnings season, these people are absolutely slammed basically the same as investment banking hours. But besides that, it's not too bad. It's not as bad as investment banking. It might be just a little bit more than sales and trading, but if you're the type of person that loves to get expertise in a particular field, because at most at a time you might be covering 2 or 3 companies, especially as an analyst, so you might develop really deep expertise in a certain field because you might be covering a couple companies from the healthcare sector. So you start learning a lot about the healthcare sector and what companies do to be successful in that sector. If that sounds like you, if you love to research, if you love to gain expertise, then equity research might be for you. Now we're going to move on to the buy side, and the first career I'm going to talk about on the buy side is asset management. And the reason I'm going to start off with this is because the biggest companies in finance are asset managers. BlackRock, Vanguard, all these companies that are managing trillions of dollars are asset managers. Now, what do you actually do in asset management? It's actually pretty similar to a hedge fund, except you're just trying to be a little more conservative. Let's say, for example, that one of your clients of the asset management company is a pension fund, and you got to make sure that those funds are invested in a way that can give them safe but also pretty good returns. If you're the type of person that loves to make investment decisions and manage portfolios, there's a good chance that you might end up in the portfolio manager role at an asset management company. Now, like I mentioned before, this is on the buy side. So typically you won't see people starting right away in the buy side. Typically, someone who goes to asset management might be someone from investment banking or sales and trading that has done 2-3 years there and then transitions. But I've seen people in my own trade get internship offers for asset managers, and that might convert into a full-time offer. So they might go right into a buy-side role. Nothing wrong with that. If that's what you want to do eventually, might as well start there. Like I said, the biggest companies in the world are asset managers. BlackRock manages trillions of dollars, and what does it do? It's an asset management company. If that sounds like something you want to do, you want to manage portfolios, then asset management might be for you. Now, the next thing I'm going to talk about is hedge funds or quantitative trading. The reason I'm grouping these two together is because both roles really require to have a really technical background. A lot of people that go into quantitative trading aren't even finance majors. Sometimes they're engineering majors, computer science majors, because it's very much more to do with math, statistics, probability, rather than to do with financial concepts. Quantitative trading is absolutely blowing up as a career path, and you can make so much money in it, but you got to be really, really good at what you do. You got to have deep technical knowledge in not just one thing, but sort of everything. Options, futures, every complex financial product there is, you have to have deep expertise in it in order to break through. The best chance you have of this is honestly if you're not a finance major, but an engineering major or a computer science major looking to get into finance. Now, if you're a finance major, you can still do this, but I'd strongly recommend having a minor in computer science at the least, because then at least you bring the skill set of being able to develop algorithms for trading to whatever hedge fund it is, whatever quant role that you're really going into. I'm pretty sure a lot of people know what hedge funds actually do, but just a really broad overview. They have clients who give them money, investors. They go and invest that money into the market looking to make a return, not only when the market's up, but also when the market's down. The term hedge fund means they hedge their investments in a way that makes the money in both scenarios. There's a lot of money to be made in the hedge fund field, especially if you can get to a partner level, because that means you actually have a stake in the fund, and when the fund makes excess returns, you get to pocket a huge amount of that. Now, the best way to get into this kind of a role is to first go into sales and trading, more preferably the trading side of things, and then to transition into one of these hedge funds. Like I mentioned before, it's very difficult to break into. Not only do you need a lot of networking, so the advice I've gotten is to develop as many connections as possible with your clients who are the people in this buy side position. And that way, when you have deep expertise, when you're good technically, and you have connections, you give yourself a much better chance at getting into one of these roles. Now, number 3 that we're going to talk about on the buy side is private equity. The most common way to get into private equity is if you're from investment banking, you do a couple of years there and then transition into private equity, because a lot of the same skill sets are used. You're doing due diligence on companies, you're doing deep dives, assessing risks, all the stuff that you do in investment banking, the type of modeling that you do is highly applicable in private equity. What do private equity firms actually do? They go out and buy distressed companies and look to flip them for a profit. Imagine you're flipping a house. It's the same thing that they're doing, but with a company. It's a very general overview. It's a lot more complicated what they actually do and the different techniques they use to actually buy these firms out. But in essence, their goal is to make a profit by buying a company that's distressed at a low price, doing some work on it and then flipping it and selling that company off, or maybe sometimes they'll take it public. Now, one of the references I did speak to, who was an investment banker at Evercore, told me that the private equity space is kind of drying up. There's crazy bidding wars happening for any company that you want to buy, so there's really not that much profit left to be made when you're already bidding so high for a company. But this is just one person I spoke to. There could be plenty of opportunity. This is why networking is so important, because you got to speak to the people who are actually working in these fields to get a more crisp idea of what it's like. Now, if you do get into this industry, it can be very lucrative, especially like I mentioned, if you could get promoted to a partner level down the line, there is tons and tons of money to be made. But keep in mind that it's going to be similar to investment banking. Sure, it might be a little bit less hours, but it's going to be the same kind of work that you're going to be doing, and it's going to be the same stress levels. Now, the next buy-side role we're going to be talking about is insurance. This is one of the most underrated careers in finance that no one really looks at, because when you think of an insurance company, most people just think about agents selling insurance. That's not what we're going to talk about. We're going to talk about the investment team within these insurance companies, because insurance is a huge client of every Wall Street bank on the sell side. The reason for this is because when an insurance company collects these premiums, they don't just sit on them. They look to invest these premiums, and whenever, let's say for example, it's car insurance and you get in a car wreck, the way they're going to pay you for that claim is through the returns that they make on the premiums that they've invested. One of my professors at Rutgers started her career in insurance, and she's gone on to do so many great things. Like at one point she was managing $40 billion portfolio. So do not overlook it. The type of work you're going to be doing in these teams is very similar to kind of the hedge fund asset manager kind of position, where you're really trying to look for investment opportunities that make sense for you. It could make sense if you're transitioning from sales and trading, because you do have that skill of identifying investment opportunities. But like I mentioned, tons of money to be made here, especially if you can stick around and get promoted to a pretty high level. So definitely do not overlook insurance. Now, next are two things that I'm going to be talking about that are neither buy side or sell side, but are huge careers in finance. The first one is wealth management. Now, an interesting story I want to tell you guys. When I was networking for my internship, I was speaking with someone at UBS, very senior person, probably has 40 years of experience. He was both in wealth management and now he's in sales and trading, but he actually gave me the advice to go into wealth management, not sales and trading. The reason for that is because he described wealth management as kind of having your own business. Once you build a client list, you have complete control over your career, because those clients are yours regardless of what bank you switch to. He told me the story of one of his friends who made $40 million switching to a different bank because of how much business he was bringing them through all of his clients. So if you want a lot of control over your career, wealth management might be for you. Gotta have personable skills and selling skills, however, because the main way you're gonna make money here is by acquiring clients, and you can't do that if you don't have these skills. Now, you might not make as much money right away as some of the other front office Wall Street roles, but if you can make consistent progress and build up your client list, you're gonna make a boatload of money, much more than someone with 20 years of experience in sales and trading or investment banking. At least that's what he told me. So if that sounds like something you're interested in, definitely check out wealth management. Now, the last career I'm gonna be talking about is corporate finance, otherwise just financial analysis for a corporation. And what a lot of people do is go into investment banking and then transition out of there to this kind of a role at a very senior level and make a lot of money that way. But you can definitely go into this kind of a role out of college and just work your way up the ladder and still end up at that same position. A lot of what you're going to be doing in this kind of a role is just helping the company budget properly, helping the company forecast their financials, and to make sure that they're set up for financial success. So kind of similar to investment banking, a lot of those skills do transfer over. And just a quick side note, this is why so many people want to go into investment banking. Not just the money, but in terms of exit opportunities, there's just so many things you can do if you have an investment banking background. But anyways, corporate finance, also a decent role that you could go into. Decent work-life balance, but obviously during earnings seasons, you might get slammed. So something else to consider. Now, those are all the careers in finance that at least I know of and that I've heard about, I've heard people speak about. If there's anything that I missed, please feel free to let me know in the comments. And if I made any mistakes, also please let me know. Like I said, I'm not an expert in anything. These are just the things that I've learned based on my experiences talking with the people in these fields. And the reason I broke these down for you in this video is because I believe, this might be a hot take, the best way to get yourself into a career is by focusing your efforts into that particular sector and not just focusing in all careers in finance. That's what I did. I, through my networking, figured out exactly what I wanted to do, what might be the best fit for me, and I focused all my efforts into recruiting into that one thing. So that's why I want to help you guys figure out exactly what you want to do. But again, my golden rule number one, network, network, network. because I broke down these rules at a very general overview for you just to get you started, get you some kind of an idea. But the only way you're gonna figure out the exact day-to-days about what this job is like is by speaking to people in these fields. Like I mentioned, I wanted to do investment banking firstly, but then the only reason I switched to sales and trading was because I spoke to people both in investment banking and in sales and trading, and I figured out I don't want to do this, I want to do that. So if you stuck around till the end of the video, thank you so much. I really appreciate it. If you want more like this, please subscribe and hit the bell notification so that you don't miss the next time I upload. I'm going to do my best to create as much content as possible while also balancing school. So it would help me out a lot if you guys would subscribe. Also want to mention to you guys that in the next video, I'm going to be giving you a full networking guideline on how to network, how to set yourself apart, how to actually get responses from people on the street. So stay tuned for that one, and I'll catch you in the next video where I talk about some more finance stuff.